Today I'm going to explain claims made, retroactive dates, and continuity in the D&O insurance policy. I've done several videos on D&O insurance as well as on claims made policy forms in general, and today I'd like to tackle various questions relative to what we call continuity and why some claims are denied. So let's start off with what separates claims made policy forms from occurrence policy forms. Under an occurrence policy form, such as most general liability policies, the policy which responds to a claim is the one that was in effect when the loss occurred. It may be a policy form from 3 years ago. It could be the current terms policy. It doesn't matter. The occurrence date of the loss is what triggers the policy. Now, a claims made policy form, on the other hand, responds very differently. For a claim to be covered under a claims made policy, the claim must be first made against the insured during the policy period or an extended reporting period, and it must be reported to the insurer in a timely manner. Where many insureds run into trouble is that they are served a summons or some other qualifying notice that would be a claim under the policy, and they ignore it or they put it to the side, or they don't think it's serious enough to report to their insurance company. Then the claim heats up 3 or 4 months later, and then they decide to report it. That's when a claim can be denied for late notice. Now, let's say the act which gave rise to that claim happened 3 years ago. Is it covered? Well, that depends, and brings us to the subject of retroactive dates and policy continuity. To answer that question though, if there has been no break in the continuity of coverage and coverage was in effect 3 years ago, then it should be covered. So let's first answer the question, what is continuity? Continuity, as its name implies, is the ongoing continuous ribbon of coverage which has not been broken by a renewal or by changing insurance companies. If you took out your first D&O policy 10 years ago and had ongoing continuity, great. You've got coverage for acts that may have been committed 10 years or less if the retroactive date was set at the inception date of that first policy. Now, if there was no retroactive date, meaning there was full prior acts coverage, then you've got coverage back to the inception of your company. So you might be questioning, how does continuity get broken? Let's say you're evaluating your renewal options on your D&O policy and your broker presents you 3 different options. If you select one of those options because it's much less expensive, but you didn't check the continuity date, you could have a problem. On each renewal for D&O insurance, you need to complete a renewal application, whether you stay with the same insurance company or you switch insurance companies. If you complete a new application rather than a renewal application, and the insurer proposing those lower premiums didn't acknowledge your continuity date, then the continuity is broken and you've only got coverage for acts which occurred as of the new retroactive date, which is likely going to be that renewal date. Now, let's take this from another angle. Let's say you take out a D&O policy on January 1st, 2021, and your retroactive date is what we call inception, meaning 1/1/21. And you're served papers which constitute a claim in June of 2021 and submit them immediately to your insurance company. Are you covered? You are only covered in this situation if the wrongful acts which gave rise to the claim took place between January 1st, 2021 and the first notice of claim, because the retroactive date was inception. If there was no retroactive date, then you had full prior acts on this D&O policy, then the claim would be covered. Now, what's the difference between a retroactive date and a continuity date? In many instances, they are one and the same if there's been no break in continuity. The retroactive date is the earliest possible date for which you can make a claim to your D&O policy. The continuity date is the earliest date of continuous coverage before a break or gap in that coverage. So as you can see, they can be the same date. The bottom line is that when you're first buying D&O coverage, it will set the retroactive date. As mentioned, it could be open and provide full prior acts back to the inception of your firm, or it could be the inception or effective date of that first policy. You should make every possible attempt to maintain that date for continuity purposes so that all potential prior acts are covered. Breaking that continuity resets the retroactive date and limits potential recovery for claims. I also think this is another reason why working with an expert in the field of D&O and other management and professional lines of insurance is important. An unskilled broker working in this area without the right experience could propose coverage as I described earlier, and you've shortchanged yourself on coverage without even knowing it. If you're looking for a D&O insurance or other management or professional coverage and want to speak to an expert, let's connect. There's a link in the description box below where you can book a call on my calendar. So let's do it and let's chat. Thanks.